people that might work for the company. So the right of shareholders in terms of in form of a voting right and the like. Then the remuneration of auditors, how they pay auditor fees. You know that at the end of the day, every company is authorized to call for an annual general meeting. That is in that meeting, the agenda will be the right of shareholders, then how they will appoint the auditor, then how they fix the remuneration of the auditor. So, and you know, auditor is a person that audits the financial statement of the company. So the fees of auditor must be stated, how they will fix the remuneration of the auditor. Then the next one, we have appointment of directors. We're talking about the board of directors, because they vote directors from time to time. So they appoint directors, they resolve them, they resolve some directors and appoint another. So it prescribes the rules in which you appoint the directors and they dissolve the other directors. Then the next one is conduct of general meeting. That means they fix the time at which they meet together, and which is called annual general meeting. They discuss some things that concerns the company, the shareholders, the directors, and many. So it must be stated how they will conduct their general meeting and the likes. Then we have a payment of dividends must also be included in the article of association. Payment of dividend to shareholders who are the owner of the company must be included in the article of association. Then the next one is the preparation of statement of nominal capital. Now, this should be prepared and submitted to the Corporate Affairs Commission. The statement to show the amount of nominal capital. So that is that. Then the next one is they will fill in the statutory form. This statutory form has to do with laws. That means statutory form should be filled and submitted to the Corporate Affairs Commission at the end of the day. Then the next one, we have a payment of stamp duty. Companies should pay necessary stamp duty, and this will be done at the stamp duty office. So before they can be registered by the CAC, and under the requirement are prescribed by CAMA Act 1990. Then the next one is holding of statutory meeting. So statutory meeting should be held and must be held within 6 months of incorporation. So they must hold the statutory meeting. So these requirements mentioned earlier on are the things prescribed, are the requirement of a company matter as regard the formation of company. Now, after that, we'll be talking about relevant terms relevant to the formation of company. What are the terms that is relevant to the formation? What are the things that they can also put into consideration? We have a prospectus. Prospectus is a registered company must disclose their financial statement or information to the public annually. You know, in as much a company becomes an incorporate company, you know, we have company, we have an incorporate. Incorporate means a registered company. They must prepare a document called prospectus. That means all the activities of the company must be shown to the public. That means there is no privacy in their dealings. And the prospectus also impose that the share of the company must be subscribed to the general public. So prospectus allow companies to disclose their information to the public, and their shares must be announced publicly so that the general public will come to subscribe for the share. So the next one, we have a subscription. Subscription, this is when share is issued directly to the general public. That's what we call subscription. And it always happens when the share is being announced in radio or television. and even newspaper that Nigerian PLC want to subscribe for shares of 50 billion to the general public, and the time for the issue is at this particular time. So that is what we call subscription. Then we talk about shares. Shares is the unit of capital of the company allocated to an individual. You know that in as much a company has been registered and it is a company by shares, that company can get finances through shares. That means they issue shares to the public and they pay dividend in return to the public who has subscribed to their shares at the end of the day. So shares is the unit of capital of the company. That is where the source capital at the end of the day. And when you see a comprehensive financial statement, you will see at the top, at the balance sheet, that 50 billion authorized ordinary share as 1 kobo, or depending on the nominal value of that share. Then we'll be talking about the share capital. Share capital, this is the nominal value of the total number of shares actually issued to the shareholder. So that's that about the share capital. Then we have the allotment. Allotment, this is the allocation of shares to the applicant. That means immediately you apply for shares, then you'll be allotted the shares, that the numbers of shares that you are applied for. Maybe 50 shares. If you apply for 50 shares, 50 shares will be allotted to you at the end of the day. So we have the preliminary expenses. When we talk about preliminary expenses, these are the expenses expanded in the formation of a company. So when a company cannot be registered, it becomes incorporate. But when a company is registered, it becomes incorporate company. But the preliminary expenses is the expenses you spend when you are when in the formation of business, when you want to register your company. The expenses you spend to the extent that the company is being registered is what we call preliminary expenses. That is that on the topic 1. Then we'll be talking about topic 2, which is private and public companies. First and foremost, we'll talk about private company. What is a private company? A private company is formed by an association of specific number of people. It is defined by Section 2 of CAMA 1990 as a company by which its articles limit the number of its members to 50 and restrict the right to transfer its share. Example is Adebowale Electrical Limited. Now, private company, they are company that the number of shares is just 50. It's limit the number of shares to 50. That means from 7 to 50. Like the private, so private, the only members that they can have, members of shareholders that they can have, must be restricted to 50 only. So that is that. So in as much a company has 50 shareholders, or within 7 to 50 shareholders, then that company is a private company. Then, what are the features of a private company? Number 1, it must be stated in its memorandum to be a private company. You know, we talked about the name of the company the other time, that content of a memorandum of association. So that company must state maybe it is a private company or it is a public company. And the name to represent private company is limited. Adebola Limited, Oguni Limited. But that for public company is a PLC. Any name at the back of the company that you see, if you see PLC at the back of the company, that means that company is a public company. But if you see limited in the front of Adebola Limited, Adebowale Limited, that company is a private company. Then restrict the transfer of the share. Private company does not transfer its share at all. The reason why is that because of this restriction of numbers of shareholders. So because it is a private nature, it is of private nature, it does not transfer its share to anybody. So 2 or 50 people are required to set it up. So people that can set a private company up is 2 to 50 people, and who can happen to be their shareholders, which are the owner of the company. Then next one is prohibit any invitation to public to subscribe to its share. Unlike that of a public company, they don't invite public to subscribe their share. They do that internally within the owner. They can share, they can buy the shares of the company internally without advertising it. So they don't invite public to buy their share, to subscribe for their share. So that is for private company. Then we have its share are not quoted on the stock exchange market. Their share are not quoted because in as much a share is quoted, it must be a public company. But private company does not quote their share on the stock exchange market. Public company. What is public company? But this is the company that does not qualify under the private company. Sections of CAMA define it as a company which allows the public to subscribe to its share and whose shares are transferable. Example are Total PSC, UBA PSC. That was why I said the other time that at the back of a company, if it is public, then you see PSC at the back.